This is page 2, Peso sampling. They gave us the audit, the book value and the audit value. You'll notice that there's 5 items in the sample. So I'll do audit first.
We weren't supposed to turn this in, were we?
You are going to turn it in. You're going to turn in the whole thing.
Oh, okay.
Yeah. But I just want to go through this to make sure that everyone's, oops. So you have 100,000 misstatement. So the projected value would be 2,400,000. Okay, misstatement was 100,000. And did you guys come up with that being an overstatement or understatement?
Overstated.
It's overstated.
Yep. Yeah. Should have been 2,400,000. They got 2,500,000. Down here, the ratio one. So this is going to be a little bit unusual one, but you can kind of see where it matters what you what are doing here. It matters what which method you use, and that's what we're going to talk about in a minute here. The 273, I don't know. I got a cheap calculator. It rounds it off at the end, so I don't know if that's anyway. Pretty close to this. It might be off by $1, but probably it's not going to make any difference in our evaluation. So this is a misstatement of 227,273. Overstatement or understatement?
Understated.
Understated. Now, that, as you can see, is a very strange situation. Notice we took this, it's the same sample, but depending on what method you use, it could be overstated or understated as far as how you project it out over the entire population. So what that tells you is it's going to be really important which one of these you choose. And that's what we're going to talk about after we do this. Difference estimation is just the difference. Oops. This one's a little bit strange in that you get the misstatement first. And notice the audit one is higher than the book one, so it should be higher. So this is going to be what? Understated or overstated?
It's understated.
Yep. So they have their book value. And plus the understatement. Projected value. Okay. So these are what you should have gotten for the answers from those. Any questions on this thing? So this is what you should have gotten, or something pretty. Mine might be up by $1 here because of rounding, but it should be pretty close.
I have a question.
Yeah.
So for C, the mean per unit estimation, if I put the misstatement as a negative number, is that wrong or does it matter?
No, that's fine. It's that can be. I mean, the big thing is whether it's overstated or understated.
Okay.
That'll tell you which one it is. But put it in a negative. I know what I mean. Subtract it from the total, from the book value. I mean, yeah, that's fine.
So you're just trying to see the what it's off by, not necessarily if it's positive or negative.
Well, you're gonna see that if it's a negative, that means that it's overstated. In other words, you have to subtract it. And now, most of the time, these will give you similar answers, or they can actually say. But this is a good example of it not giving you a similar answer. And so, if we go to, I think I'll let you guys do number 3 and 4 on your own. There's 2 more in that handout, and you can turn those in when you do those 2. 2 more, so that'll complete the handout. But I want to do page 6 together a little bit here. So, as we saw, depending on what method you use, it could be understated or overstated, or so the question is, well, what do which one of these is appropriate? And we're going to talk about.
When do you want to turn in by, Professor?
I'm going to put it up for today. That means you have a week to turn it in. You'll have until next, what's the day, the 4th, so you'll have to the 11th. Maybe do the 11th.
Next Thursday before class?
Even right after class.
Sorry?
Yeah, or after classes. I think it's midday. Okay. But again, you guys, one thing I mentioned before, and I'll mention it again, and that is that you can turn things in late, but whenever the due date is, that's when it's going to go into the grade book. That's when it's going to show your grade to date. So, just know that obviously it's not going to, if you don't have anything in, it's not going to be there. It's going to be a 0, and your grades going to look terrible until you do turn it in. But I do take stuff late, and I also take I do allow for retakes and stuff. You won't get the same forms and all that kind of stuff, but if there's something you want to turn in or resubmit, you can. So the whole idea is behind getting as much knowledge in as we can. So if you want to redo it and do it better and get a better grade, I'm all for it.
Professor, I have a question. Since I did pretty much most of these pages on the paper, can we send you copies or pictures of this, or we need to actually send it or upload it?
Pictures are absolutely fine.
Okay.
Pictures, scans, right in the document. I'll take it any way you have it. Yeah, and you could even, and you can write it on notebook paper if you want. That's fine too, and then just take pictures of it. However you turn it in, I can figure it out. And the only thing that I'll warn you a little bit against is that the only thing I've had trouble with is that Blackboard app for your smartphones or iPads or whatever, that for whatever reason, not all but some of them they get in this weird pending thing.
Okay.
That they can't. So if that happens, I'll send you an email saying
you can't see it.
Well, and I can put it in manually. It's not the end of the world, but just know that is one of the kind of quirks of whatever it is. So yeah. So just know that.
Okay.
Okay, so here, let's go to this. So the question is, when to use it? Mean per unit is appropriate when The items in the sample have similar values. So when the items in the sample have similar values, the mean per unit one is okay. Another way, more statistical way of saying it is that the variance is low, or standard deviation is low. So, you know, that's one of the again, that's not, again, that's kind of a statistical way of saying it. But in other words, if they're all kind of around the same value, they all have similar values. Now going to our page 2 here, the values jump around a little bit. You know, they go from 200 to 300, and you know, so these are kind of a wide variance of the, you know, of the amounts. So this probably would not be the ideal way to do it. This one probably would not be what you want to do, because, you know, unless they're pretty closely, you know, related, they're very close in value. This one's not a great one to use. Now, if they are, it's okay. And this one can be used for almost, you know, for a lot of things. So if you have a pond that has, I don't know, you have 100 ducks on the pond, you want to know how much the weight of the 100 ducks are, you can take 10 ducks and weigh them and then project it over. Well, you know, because I don't know anything about ducks, but I assume ducks are about the same weight, and so that if you weigh them, okay, they're all kind of the same, we can project it over the entire pond and say, okay, this is how many pounds of duck we have out there. So anyway, so this can be used for just about anything. Okay, ratio estimation is appropriate when the misstatements in the sample are proportional to the value of the items. So, for example, if you had 2 items, say item 1 and item 2, and item 1 was $10, and item 2 was $6,000, that item 1, if it has a misstatement, is going to have a smaller misstatement than item 2. There's a lot less that can go wrong for item 1. So ratio estimation is one that a lot of auditors that use this will use this one, because you can actually use it for a wide range of items. And that usually this does follow, you know, that if you have an order for $10, if it's off, it might be off by $1 or $2, whereas this one could be off by $200 or $300. This one probably is not going to be off by $200 or $300, right? But this one can be. So usually this, so the misstatement would be low here, you'd expect. And this one would be misstatement. Be higher, let's say lower. In other words, it's proportional. So the ratio estimation, and if you look at it, we're saying that, okay, there's a ratio here, and that everything in this, is up by this ratio, whether it's $10 or it's $5,000, it's off by the same ratio. So the ratio estimation is kind of, and this one probably is more fitting, especially if you have a wide range of dollar values, because it makes more sense that smaller ones will have smaller misstatements. Bigger ones will have bigger misstatements. So this is, you know, that's the ones that's kind of the go-to for the most part. Okay. Difference estimation is appropriate when the misstatements in the sample are the same regardless of items values. So, for example, let's say that the error that you find commonly is that they're supposed to charge a $5 handling fee. And that $5 handling fee is often either not charged or inappropriately charged, or however however the error comes about. So regardless of the size. So, you know, that if it's a $10 item, if it's off if the handling fee's off, it'll be $5 handling fee. If it's a $6,000 order, it'll be off by the $5 handling fee. So if the misstatement is off by the same amount, this is not a bad. This is a good way to do it. You know, kind of unusual, but if this is the case, you know, that if there's something there's a standard price that is causing those to be misstated, then the difference estimation is a good one. So regardless of the size of it, you know, this is off by it'll be off by the same amount.
Is that regardless? Is that the word regardless you got there?
Yeah.
Okay.
Now, I'm not sure if it's spelled right, but my wife was an English professor, so I get spelled that a lot. What is that? It's my new way of spelling the word regardless. So my son's really good at English too. Nothing like being corrected by like a 9-year-old. All right. Yeah. So they'll be off by the same amount. So there's difference. So that's kind of a strange one too. This is probably, again, the one that most people would be using for auditing anyways. You know, and just because a lot of times if there is something off, if there's a $10 order, it'll be, the misstatement will be less than if there's a $6,000 order. You expect it to be a higher, you know, percentage, or you know, not a percentage, but a higher dollar amount to be on. Any question on that? Okay, so what I'm going to do is you guys can do pages 4 and 5. I don't like the way I numbered these. I'm going to go through and change this to 4. I usually have the page number. If they're one page or things like this, I usually match the page number to whatever the problem is. But anyway, 3 and 4 on pages 4 and 5. You guys can do these on your own. And these are actually a little bit simpler. And this is actually a lot of times how they show it from the CPA exam. So for instance, they say a sample size is 60 and the total audit value of the sample is 1,800. So what you're gonna do for each of those is divide by 60. You know, that'll give you the average on those. So this is kind of the wording that you're gonna see a lot of times on the CPA exam. You generally don't see, you know, they don't give you this and then say, figure, you know, have you do that. They'll generally just give you the totals and then have you figure out what it is, the average.
Professor, are you going to ask us some questions like give us an example when they ask us which method to use?
I think about the exam. I don't think that's on there.
Okay, because I was like, I would like to like see exactly like some examples of when you would use the difference or the ratio, because those two are kind of confusing just now.
Yeah. It basically is. It goes down to what the misstatements would be, and again, and that's a little bit of a troubling.
So after you get the answer for the misstatement, then you go back in and see what the samples, what some of the values in the samples are.
That very well may be where you come up with where they are. Yeah, if for instance, here, let's go back to page 1. So if these were all off by say $5. If there's a misstatement, if it was off by $5 for each one, you might say, okay, this is off by $5, so we'll just use difference estimation. If they're proportional, big ones were up by more than little ones, then you may say, okay, we'll use ratio estimation.
Okay.
Yeah, so the items in the sample in themselves would definitely lead you to see which one it is.
So some of those, the numbers are way off. So maybe the ratio would be the best one for that particular sample.
Yeah. The larger amounts are off by, the larger numbers that are off, the larger errors are larger with the higher ones and less with the smaller one. This one's off by 100. This one's off by whatever it is, close to 900, whatever it is, 900. But anyway, so the bigger items will be off by more money. Then they would say, okay, this is probably going to be a ratio.
Mm-hmm. Okay.
But again, like if they're all off by say 100, regardless of what size they were, then you might say, okay, that's a percentage. And if these are all very similar values, if your audit came up with very similar values, like they're within 5% of each other, you can use the mean per unit.
Mean, okay, I get it. All right.
Is there another question or statement? I think someone was talking. I interrupted somebody. No? Okay. Yeah. So and here's another thing that I think I told you about auditing. That auditing is judgment. It's also happiness, but it's judgment. No, so auditing is judgment, and and that's one of the things that makes it difficult. That it is based on on someone's judgment. So which method should you use? It's going to be a judgment call. Sometimes it might be obvious, but sometimes it might not be. So. Okay. Well, I think, but yeah, so I'll put a drop in there, and you can do pages 4 and 5. 4 and 5, problems 3 and 4 on your own, and turn those in. And if you can, if you want to send me and see if if you're on the right track, I'll definitely look at them if you want. Or but again, it's I don't think we should have too much trouble with that. Okay, I did something wrong here. There's not any handouts. Okay, I think the next handout, I think we did chapters 1 and 2. I think we started on that one. I think we stopped on page 6. Is that right? Or did we stop on page 5?
No, we were on page 10.
Oh, we did the whole thing?
Yeah, we're on Foreign Corrupt Practices Act.
Yeah, so that'd be page 8.
Which one?
It's number 9. It's called Foreign Corrupt Practices Act.
Oh, okay. Very good. All right. See, I'm You know what I gotta start doing? I should start doing them online, because then they save them, then I can just pull them up. I'll do that. Maybe that'll be the next handout. Okay. So Foreign Corrupt Practices Act. This came about because U.S. corporations were bribing foreign government officials to sell their products. So instead of, so if you wanted to sell whatever, you wanted to sell trucks to a foreign country, what did you do? You build the best truck possible? No, you go there and you bribe the government official to give you the contract to sell trucks at an inflated rate to their country. So this was something that U.S. companies were doing. It was fairly prevalent. This came out in the first government, I think it was 1977 for the Foreign Corrupt Practices. And so Congress got a hold of some of these people, people in the U.S. For these companies that were doing it, and they pulled these presidents up in front of the Congress, and they said, "Well, we had no idea that was going on, and if we had, we'd have put a stop to it." So Congress didn't think that was funny. So what they did is they came with this Foreign Corrupt Practices Act. And the Foreign Corrupt Practices Act is that you cannot bribe a government official. Now, it has to be a government official. You can, if you give money to a businessman to buy your product, that's different. That's, the business person, whatever their businesswoman, whatever their business is, whatever you do to get that business is fine. But this is talking about government officials who are spending government money, that you cannot bribe government officials. And it was there, it's there to try to stop U.S. companies from doing that. And one of the interesting things about it is the law. One of the interesting parts of the law was that it said that all transactions, there's other parts of it too, but all transactions are completed with management knowledge. So this was actually huge. So if you were brought in on a Foreign Corrupt Practices Act charge, you could not say that you didn't know. By definition, the law says you did. You may still have defenses, but saying I didn't know it was going on is not a defense, because by law you did know. And so what this caused is people to or companies to have internal controls. So actually, for the first time, companies were required to have internal controls. Before this act, if they didn't have any internal controls, it was up to them how they ran their company. It didn't matter. They could do whatever they wanted. After this, it said, okay, you guys have to have internal controls, because these internal controls are you're going to rely on to make sure that you know of all the transactions that happen. This law, by the way, is Foreign Corrupt Practices Act. You'll still see this come up in the news sometimes. I think Walmart got hit with it a couple times. But anyway, You still see it come up every now and then. And there's still people that don't like it because, well, a couple of reasons. There's some people in the U.S. that don't like it that say, look, that's the way they do business in whatever that country is. And if we don't do it, somebody else is. There's someone else that will do the business the way that they want to do it in that country. So there's that, you hear that argument. You also hear the argument from other countries that say, look, we have our way of doing business and you have your way of doing business, but why do we have to do business your way? So there is also that sort of thing that you got to do business the way we do it in the United States. Thing to it that is not necessarily the way it is around the world. And quite honestly, in some places, the line between business people and government officials is, it's very vague. Who's a government official, if they have a position, and so forth. If you're running shipping operations and stuff like that, then it may very well be part of a government job, kind of a thing that you work for quasi for the government and all that kind of stuff. So it's not that this law isn't without controversy. It is, but it basically is there because it was felt at the time, and I think probably still is, that a lot of these countries, especially countries that weren't that wealthy, that for a small amount of money that these American companies were really taking advantage of these countries by doing stuff like that. So anyway, it is still there, it's still on the books. There's still charges coming from it. I think Walmart or something. I think Walmart may have got hit with it for I think Mexico and India or something like that. But anyway, you don't see it too often. But it does come up every now and then. Okay, question on that? Again, but the big thing about that act, though, is that it said, okay, companies, you have to now have controls. You have to know what's going on with your finances. You can't just say, oh, we didn't know they were doing that over there, or, that our office and wherever was doing it. Okay, Sarbanes-Oxley, you guys may have already heard about this. Sarbanes-Oxley Act came from two different billion-dollar frauds. The first one was, I just drew a blank on Enron. So Enron had $1 billion fraud, and people couldn't believe it. Before Enron, a big fraud would be, $50 million was a huge fraud. No one ever believed that there would ever be $1 billion fraud, and yet that's what happened with Enron. About a year later, there was a Worldcom fraud. So just as things were dying down with Enron, then Worldcom got hit. So you had these $2 billion frauds that happened. And the Enron one, they were kind of recovering from that, saying, okay, well, that was just this weird thing, and it was, one other thing. And then when Worldcom hit, all of a sudden the markets just started dropping. No one believed any of the financial statements. The financial statements, no one trusted them because it didn't matter who the auditor was, because they said, okay, look, they're missing $1 billion, misstatements and stuff. How can that happen? And so the market was really, and this is for all companies, was really starting to drop, badly. So there was this law called Sarbanes-Oxley that was kept coming up in Congress all the time. That was for years it was blocked by businesses. Every time it came up, businesses would spend money lobbying and get it blocked. And so the Sarbanes-Oxley was wrong. Well, all of a sudden, because the markets are in such disarray that all these businesses said, we need ask for Sarbanes-Oxley. And it was that to restore confidence. So, again, for years they didn't want it, and then all of a sudden they do want it. They want it because, again, people cannot trust the financial statements. People are dumping the stock of any company simply because they have no trust in the financial statements and the reporting and all that kind of stuff, and they don't want to get caught. Like if you invested in Enron or Worldcom, they don't want to get caught there, so they just started dumping all their stocks. And that's why we came up with the Sarbanes-Oxley Act. And the Sarbanes-Oxley Act actually has a lot of reform type things in it. We'll go more into them later on. But there are quite a few things in there that make it to restore the market, to restore confidence in the market. Okay.
So what is that you have underneath the number 9 on that page? What word is that?
Required.
Required. Okay, thank you.
I am going to start typing these in because this. Okay. I know that would. This is kind of an archaic setup, but anyway, it's but we'll still use this. We'll still use this for the doggy. See, the doggy has to have this, so you can't do that. But this is required to have internal controls.
Okay.
Before this act, they could run the company however they wanted. If they didn't have any internal controls, it was their own business. Same way, right? Yeah. See, this is for those people like me that have bad handwriting. We can understand it. But So anyway, so this is so this is made that they have internal controls, and Sarbanes-Oxley Act really reinforces quite a bit more. Part of the Sarbanes-Oxley Act is that companies, now their top management, literally signs a piece of paper saying that they take responsibility for the internal controls of the company. So this is kind of like building up to the internal controls that companies now must kind of have controls in place so that they can report their income and so forth accurately. Okay. This stuff is a little bit, we're not going to go too far into this. Corporate governance. This is really big on the AIC and on the CPA exam. All companies will have a board of directors. It might be one person. It might be whoever owns it. So all companies have a board of directors. Again, if it's just a one-person company, it just have one person basically on the board. One person has to be is in control. But certainly larger companies will. All publicly traded companies we call those issuers. Must have an audit committee comprised of outside directors. So board of directors, so it's sort of like this. Here's the board of directors. I'll get down here. And board of directors can be inside directors or outside directors. So of these directors, They will form an audit committee of some of the outside directors. So some of these people are inside directors. Inside directors means they also work for the company. So for instance, the president of IBM may be on the board of directors. That's an inside person. He's on the board of directors, or she's on the board of directors. I think it's she now, actually. She's on the board of directors, but she's also on the board, who also works for the company. So that's what they call an inside director. Outside director are people that are not working for the company. They don't have a job at IBM. The audit committee has to be only outside directors. It cannot have an inside director. The audit committee must have a financial expert. And what they mean by that is somebody who, made it more worse. Let's have it's financial. A financial expert, somebody who knows about putting together financial statements. They do not have to be a CPA, but they have to be knowledgeable about financial statements. It sounds odd, but there are a lot of people on the board of directors who may have no idea of how financial statements are made, or even, as far as, reading them even. They're there for other reasons. But the audit committee must have at least one financial expert. So it has to be outside directors. They can't be inside, and they must have a financial expert. And the idea is that person will know sort of how the whole audit thing should be run. They should know how the financial statements are put together and how the audit should be done. Questions on that thing? Okay. Let's go to. I actually, you guys should do these cycles here. This is new. Did I go over the new stuff for the? I don't know if I covered the new stuff for the CPA exam. I think I sent the stuff out that was sent out last week. CPA exam changes.
You gave them out to us in a hand, for us to print out from our email, but I don't think you went over them.
Okay, I'll go over them. I'll talk about this for a second. They're focusing more. This is new from the ACCT. This will be on the CPA exam. What they're getting into, they say, look, especially nowadays, a lot of this stuff is electronic, and that the actual process is important to look at, not just the account balances. So it isn't enough just to look at the inventory account. You have to know the entire process, say, for inventory management. That how do they evaluate their inventory? How do they store it? What are the costs on it? How do they make the determinations? All these things that go into the inventory management process or cycle, that those things are all important to know when you're looking at the inventory. So it isn't just the accounts, it's also looking at the process for each of those. So these are those things that are kind of like the cycles of business. So the financing process, this is for short-term and long-term financing. Short-term would be how do they pay for products this year, getting in the stores. Long-term might be, how are they going to expand the business, or make a new factory or whatever it is. Purchasing process is purchasing goods. Human resource management is human resource stuff. Inventory management is basically how the goods are acquired, how they're stored, all that kind of stuff. And this also has to do with sales. That when goods are sold, they leave the place. Those costs that go into it. And down here, this is also due to, this is for sales, but this is for the revenue part. You know, so this is dollars coming in. These are goods going out when you talk about the inventory process. We're not going to go too deep into those, but just know that this is kind of the new way that they're thinking about doing auditing. It's not going to change basically the basic audit steps, but there may be more to it than that you actually have to get an understanding of how the business actually does these things. How does Walmart get their customer, or get their goods to the stores? How do they store them? How do they account for them once they're sold? That sort of thing. How do they acquire them? How do they acquire the goods? Short-term financing, long-term financing, all that kind of stuff. So these are kind of looking at the cycles more than just the accounts themselves. So rather than just looking at revenue, you look at the whole process of how revenue, sales made, how it's collected, all that kind of stuff. So I just know that this is kind of the new way. We'll see that on the thing. Okay. Let's go to the last page. I think we'll take a break after this one. This shouldn't be too bad. Okay. Professional standards for external auditors. Competence and capabilities. You're required to be technically trained. And proficient. As an auditor. So technically trained and proficient. And technically trained just means what? This is what we're doing right now. You're being technically trained. So this is sort of your education. And proficient just means that you know what you're doing. You're at least proficient enough that you can complete the audit. So technically trained, education, proficient, and a lot of this comes from actually doing audits. So as you progress, your first job at audit, you do whatever they tell you to, obviously. But then as you move on, you get to be more proficient at it. You get to be to know exactly what to do and all that. Independence is very, very, very important. Independence. And the external auditors there are whole rules on this, but a whole group of rules. You not have any direct interest in the client. I'll say financial interest. So external auditors cannot have any direct financial interest in the client. So what does this mean? It means if you're auditing IBM, you cannot have one share of IBM stock. Why? Because your audit report would have an impact on your investment, right? A good audit report would presumably be favorable, and a bad audit
There would be like
be like what? So,
no, I was just gonna say it'll be like you're being biased and having self-interest and
it's
making
exactly it.
their audit look.
Yeah, another thing would be just like conflict of interest.
Yep. Those are both. But bias, you know, to be independent, you're supposed to be unbiased. You're supposed to, you know, that you are you are expected that you are going to be clean, basically, when you do the audit. And you might say, well, big deal. I own one share of stock. I'm not going to, you know, throw an audit report for, you know, $10 in one share of stock or whatever. Well, the thing is, you don't want it to come out that, oh, the auditors, they actually had investments in this company when they were doing the, you know, audit report. That completely defeats the purpose of an audit. The purpose of an audit is that people can rely on the financial statements. If there is a question of independence, all of a sudden that audit is worthless. And that's the only thing that you really have to give financial statements is credibility. So independence is very important, that you cannot even own one share of stock. Even if you say, well, who cares? One share of stock is not going to make any difference. You cannot do it. It has to be, you have to be independent in.
Professor, can you share your screen what you're writing, please?
I was going to keep that a secret. Fine. So it must be independent in fact. Let me read that here.
I have a question.
Yeah.
So does the same pertain towards internal auditors? Are they allowed to have any stock?
Internal auditors
yeah.
can definitely, they definitely can have stock.
Okay.
Now, you do, when you look at the internal auditors and if you're going to use their work, we'll have it in the next chapter. That you look to see if they're competent and if they're objective. But internal auditors, you remember, they're paid by the company, so they're already, you know, they're not independent. You know, if I'm an internal auditor for IBM, IBM is writing my paycheck, so I am not independent, and for that reason, I can't do the audit. So
Were any of the
I'm sorry?
I was just curious. Do you know if any of the Arthur Andersen auditors had any stock in the companies that they were auditing?
No, I'm sure they won. When you go to work for a CPA firm, they'll hand you a list of all their clients, and they'll say, "Do you have any stock in any of these clients?" And if you say yes, they say, "Oh, well, good. You get to sell them today because you're not going to work for them unless they." So they're pretty good at that. Arthur Andersen and Enron. Those of you that maybe don't know the full story, Arthur Andersen had a consulting side that gave consultation in how to hide losses, and they did it through these joint ventures. So Arthur Andersen's consulting side gave them these, had them set up these joint ventures to hide losses. The auditing side, which was much smaller, did not say anything about it, even though these were obviously not joint ventures, and they were simply there to hide the losses. So that is kind of the you know, what would actually happen with Enron, that the auditing side did not go against what the consulting side had said. It had advised their clients to do. You know, the auditing side was charging $5 million for the audit, and consulting was walking home with $150 million for a consultant or something. So anyway, so that was a big problem. That the auditors themselves were not, it wasn't that they weren't independent, but they certainly didn't do their job. You know, they should have went against whatever the consulting side of their own company said. And there is an ironic thing about this. First of all, there's Arthur Andersen shredded all their documents relating to it. And the reason they shredded all the documents was that instead of getting a fraud, which was intent, they were looking for a negligent, that they would be seen as being negligent, that they didn't have backup. And by the way, back in that day, everyone would have done the same thing. Every CPA firm, other CPA firms did that. Anyway, being big news was when Arthur Andersen did it. Arthur Andersen was the biggest CPA firm in the United States. They were huge. Everyone wanted their name on their financial statements. After Enron, no one wanted their name on their financial statements. So it literally the largest CPA firm by far. I mean, they were almost as big as the other largest. I think there was a big six back then. They were almost as big as as several of those put together. Basically just went out of business. The ironic thing is the consulting side, the one that was really responsible for setting up those accounts, they're fine. They're still around. Accenture, the Accenture group, that is Arthur Andersen's consulting side that broke off after, so they're actually still in business, whereas the auditing side is gone. And one of the things people don't realize too is that Arthur Andersen won the lawsuit. They lost it to a grand jury, but on appeal they won it. Didn't matter that the business had already been was gone. No one wanted them as auditors. But really wild time. I mean, you can imagine, the largest, if you're in whatever field you're in, the largest group goes completely out of business. It'd be like, being in cell phones and all of a sudden Apple, goes bankrupt in a year. Yeah, I mean, crazy time. But that was like the thing with Arthur Andersen and Enron. It was a very kind of an odd situation, but and no one in a million years thought that it would sink the entire CPA firm. But that's exactly what it did. If you had Arthur Andersen on your financial statements, your stock was just dropping like a rock. So, okay, so let's go to. It's important to be independent in fact, and two, to be independent in appearance. Oops. So to be independent in fact, in other words, you don't have any, but also to be independent in appearance, that it doesn't appear that you have a problem with independence. Again, the only thing that an audit gives the financial statements is credibility. So if it looks like you're not independent, that credibility is gone. Okay, do professional care. This is basically you don't do a sloppy audit. Probably a better way to say that, but that you actually do the work that you're supposed to do for the audit. It's sort of like up here. Up here means that you have the ability to do it. That you're technically trained and proficient. This means you have the ability to do it. This means that you actually do what you're supposed to do. So you actually complete a professional audit. And one of the things you hear come up time and time again is professional skepticism. And that is that you are always the professional detached from whatever it is you're doing. You're dealing with people. But at the same time, you have to maintain your professional skepticism in that you can separate yourself and be skeptical of whatever it is the audit client is giving. So so maintain a skeptical mindset about the audit. And that whenever they give you something, whenever you see numbers, that you are skeptical. Not that you think that they are necessarily, you don't jump up and down and accuse them of fraud, but that you are skeptical of the numbers and that you are going to have to do whatever you need to do to get comfortable with the numbers. And again, you're dealing with people. So a lot of times someone will tell you something. Normally when someone tells you something, it's offensive if you say, oh, I'm skeptical about that. But that's exactly what you have to do when you're an auditor, is when someone tells you something, you say, okay, well, the controller said this, we got to look in to see if that's actually the case. So it is a little bit, maintaining that skepticism is important. Okay, I think we will take a break here. What time is it? Okay. And I think we'll go over the. I want to go over the CPA exam changes. When we come back, we'll go over the CPA exam changes. Okay, so let's see. What time is it? 7:15. Let's see if they'll be back at. I don't know. Let's not take too long. Let's say 7:20. Take a few minutes, get up and stretch. Okay, let me put the camera on there. Okay, be back there again. Okay. Yeah, so we'll be back at 7:20, and then I think we'll go into the CPA exam changes. And part of the reason why we go into CPA exam changes is those are things that will probably be tested. When you guys take the exam. New stuff is always tested on the exam. right, changes.
Professor,
Yeah.
I have a question real quick. Was there anything put under the human resource management process on page 9?
No, not too much. I mean, that is obviously to do with the hiring, hiring, firing, evaluation of people. And part of that is to, if you think about it, at least initially it might sound like it has nothing to do with auditing, but actually there is, because there could be liabilities in that hiding in human resource management, how they hire, how they fire, how they, are they complying with federal laws and all that kind of stuff. So you have to know the process of how they actually get people into the company, how they do their evaluations and all that sort of thing. Human resources used to be, back in my day, they used to be, you walk up there and they'd hand you a brochure about, something, and you'd walk out. But now it's very, there's a lot of legal stuff, and for the better, that they have. So the human resources really to see how they bring people in, how they do evaluation, how they fire people, all that kind of stuff is in there. And again, part of it is because there might be liabilities for the way that they do their human resources. So looking at that whole cycle is can be actually fairly important. We don't concentrate on that too. Yeah, we don't concentrate on that too much here. But a lot of times, liabilities are a big thing, and especially, and there are a few liabilities out there that there's some liabilities that are, if there's a lawsuit, for example, that's an obvious that there's a potential liability. But there could also be unasserted liabilities, and that is that they might get hit with, discrimination suits or something along those lines, for whatever reason. It could be race, it could be, sex, it could be religion, it could be whatever, those can be big dollars. So that's why auditors need to look at those kind of things. Okay, so changes of the exam. Let's see here. And this is kind of a summary. So when are these taking place? These are the new changes that are going into place on July 1st, 2021. So 5 months from now. No, yeah, 5 months from now. These are going into place. So most likely for most of you, that'll be the first time you take the exam, would be after that time. So you'll probably be running into these. Move this over. The most significant is there a need to have a digital and data-driven mindset. And so this is kind of the important, this is kind of the switch to the processes and kind of the cycles rather than simply looking at the accounts. And in that, how these things flow in the business is actually quite important. And that same thing, that's down here. Auditing, like we're doing, business processes. Those are what they're looking at, and that they'll be developing some audit procedures. I seriously doubt they're going to do away with any audit procedures that we currently have for testing balances, but there might be more things in there about testing the process. And if you look at this, these are probably mostly going to be IT people, a lot of them anyways. Looking at those people that they're the system for controls. BEC section is the business section. Again, they're going to be looking at the processes. So there's going to be some, and by the way, this is one of those areas that is sort of uncertain. It's kind of it's uncharted territory. This is kind of a new thing. So they're not 100% sure how these are going to be tested. My gut feeling is that it's probably going to be fairly simple and straightforward, at least at first. And when they start developing more standards on it, they'll probably be a little more, tricky. But certainly the CPA reviews that you take, it's their business to be up on those things. So it's their business to look into those. And so hopefully that they will be able to prepare for that. They talk about the blueprint. I don't think I sent you guys the blueprint. The blueprint is actually, it's a fairly in-depth thing about what's going to be on the exam. It's fairly in-depth. That they tell you a bunch of information. They tell you a range of percentages. So this will be, this will be from 15 to 25%. This will be from 5 to 10% and all that kind of stuff. But it's kind of the blueprint, and the blueprint is considered what, at least theoretically, you should be studying for. It's actually a very large. It's probably like 50 pages or something. But so I can send it to you. I have it. So the blueprint is now going to be expanded testing of digital skill sets. So this will be more focused on computerized stuff. This includes test taking audit data analytics. So they give you data that they want you to analyze. And again, this is kind of a new uncharted territory that it'll be interesting to see how it comes out. Looking for anomalies, which would indicate fraud. And this is sort of doing the searches. So they may call it data mining, but it's also just data searches, data sorting kind of stuff. And so that's what in the auditing, when they actually do some of the practice tests, that's what they're going to be looking at, is that you can find things in the data that might raise concerns or that sort of thing. And the CPA review people should definitely have that kind of stuff kind of sorted out. There's a lot of uncertainty about it, though. I can tell you that for auditing, they are talking about how the uncertainty is. For taking it, because it's a fairly decent amount of the exam is going to be on these kind of digital things of analytical procedures, which we haven't talked about, but kind of pointing you in the direction of where fraud might be, what things might be fraudulent, or anything might be misstatement. The one thing you got to remember about auditing, especially for a lot of large companies, is if their financial statements are misstated, many times it's intentional. If there's a $17 million error, it's going to hit somebody's budget or something. Somebody's going to say, "Hey, wait, why is my department getting hit with $17 million?" So, it's very unusual that especially if you have large dollar amounts, that nobody knows about it. That it's a mistake. It's a oops. I entered $7 million for that stapler instead of $7. It doesn't usually occur that way. So looking through the data is one of those ways that they a lot of times will find things. And analytical procedures, we didn't talk about this yet. We will talk about it in the next chapter we cover. But analytical procedures they find, and we're talking about ratios for the most part, they find about 95% of the fraud is found through analytical procedures. They're not necessarily evidence of fraud, but they point you in the right direction. Okay. BEC, you'll be working directly with the data. In the past, they would just give you the data, say, here's the data, figure something out with it. Whereas now they'll actually, you'll be actually having to pull things out of the data. They're not going to tell you they're increasing or decreasing or whatever. You're going to have to figure that out. SOC reports. This is a weird one. I'll talk. Yeah, let me talk about this one. What are SOC reports? SOC reports are, they come about from service organizations. That these service organizations are organizations that do obviously services for a company. It could be cyber stuff. It could be for instance, Xfinity Business. They're doing your business thing. It could be payroll. ADP is a company that does payroll. A lot of times you get payroll. If you're some of you that are working will, you may get paid by ADP. They are a service organization. They'll do the payroll for companies. Those are all service organizations. Now, here's the thing. When you do an audit, you have to get comfortable. Just because your company is not doing the payroll expenses on the audit. It's on the financial statements, payroll expense. You as an auditor have to figure out the controls that are involved in doing that, creating that wages expense or salary expense or whatever they call it. So let's take a company, let's take like Xfinity Business, and let's say Xfinity Business has 10,000 corporate customers. You cannot have 10,000 auditors storming Xfinity and doing audits on their on how they do their internet, provide their internet services. So what do? They have an audit which is called a SOC. It's a service organization audit, and that is what you use as you bring that into your audit and say, okay, there is this audit on their controls and so forth. I'm going to use that for me getting familiar with the auditing. So that's what that is. It's kind of strange. You'll notice something here too. It says SOC 1. It's got a little R behind it. SOC 2. Those are two different types of the reports. These are actually registered trademarks. Those are actually by the AICPA. Those are their trademark audits. So that's a little bit strange. There's SOC 1, there's SOC 2, and there's SOC 3. SOC 3 is for the public. SOC 1 and SOC 2 are only for auditors and people on the inside in management and that kind of thing. So these will be in the audit report also, in the auditing section. I got a thing already for those. I may even beef it up a little bit, but the SOC 1 and SOC 2 ones are going to be in there. And you'll see even in the BEC section, the business section. One of the things that they're going to stop doing is they're going to remove a lot of the differences between the international standards and the US standards. It used to be, how do the international standards differ on this than the US standards? And they really found that there's not that much difference, and that, people were kind of memorizing things that were not usually that big of a, that significant, the differences between those two. So they're going to stop doing that, saying, okay, look how different they are than we are. And the idea is that if you're doing something on the international standards, then just follow the international standards. That's kind of the way that they're looking at it. We don't need to tell you what the differences are between their standards and our standards. If you're doing it under their standards, you just do it under their standards. Okay, what's not changing? 4 hours per exam. So it's still going to be, part of it. I should have taken this part out. Becker recommends that candidates focus on passing these two exams as early as possible before July 21st. The reason being is that there's uncertainty in it. So there is uncertainty in the exams, and that's why that they would be that's why that they would be encouraging people to take it ahead of time where they know more what's on it rather than later when they are not as sure. Having seen them go through this before, this kind of stuff, I can tell you that they usually adjust. They usually make adjustments. If there's a section or questions where that everyone tanks on, they usually will make adjustments, to make it a kind of a fair one. I doubt that the pass rates are going to go down, at least not very much, not noticeable. And quite honestly, it may even be more of an opportunity because, again, it's new stuff. It's probably not going to be as weighted as hard as it may be if it was just a few things coming out, whereas these are kind of big changes. So anyway, any questions on that? So these are the kind of the new changes that are coming through. And again, the big ones for us are going to be how they're going to test the processes that they're doing. So this testing of the processes is kind of going to be one that they're going to be looking for. This stuff, finding anomalies and stuff, probably isn't going to be. They actually already kind of do that in some of it. That you already look through the data and try to find things that are unusual that you want to look at. Those are the big ones. The SOC1 and SOC2 reports, those are pretty straightforward. SOC1 is for financial reporting. SOC2 is basically for everything. So SOC1 is just for the financial part of it, which is what we would be looking at. SOC2 says, okay, how do they secure, the company's data? How do they do all these other things that, besides just the financial reporting? These are not that big a deal, I don't think. I don't think these are going to be, they're not that difficult to understand. So, any question on that thing?
How do you get all this information, like the changes that are going to be coming?
This, I just looked it up. This came from the Becker review, the Becker CPA review. They wrote about what the changes are going to be. And so this is kind of their, if you just do a search on, 2021 CPA changes. Let me see if I have it. I'm almost positive.
Yeah, but this sounds different. Aren't they there's gonna be changes in 2024, right? Basically, you'd have to pick like a specific discipline.
Yeah. Yeah, they're looking at a number of things. The thing you got to realize too, though, is that these things change. I mean, so it would be interesting to see how a lot of this pans out. But yeah, they are looking more towards it, and I think that they're developing it more along the lines of, in the past, a lot of it was based on handwritten stuff. Even the computer questions and stuff were on handwritten stuff. For example, some of the stuff in sampling that we just did, there are, you can actually find, there are ways sometimes that you can actually test 100% of a sample. Something you could never do before. But you could, and I ran into that when I was even way back when I was in auditing. We used to have to search around to see if we could find, purchase orders that were approved after the item was delivered. They should always be approved before, but sometimes it'd be after. And I can remember going to the IT people saying, I got to find, here's a list of all of them. There was no searching for them. Here they are. So you run into some of these things, I think, and I think that's what they're kind of getting into now, is that getting rid of that kind of past paper focus and steering more towards something that's more practical. And part of that is, for the CPA exam, those people are going to be practicing and people are going to be non-practicing and all that kind of stuff. So yeah, it'll be interesting how it comes about. The changes. I think most of you guys will probably be taking it before 2024, though, I would imagine. So I think that the changes that we have. Go ahead.
Oh, I'm sorry. No, I was just saying, like, for myself, like, I mean, that's the plan. But when I just think about the time horizon, I mean, I can potentially fall in that
Yeah.
bucket of taking it in 2024.
Yeah, and but at the same time, I think maybe you worry about those things when it gets closer.
Right.
And too, being around the block a few times, a lot of times they'll say we're going to do it this, and they push it back, they push it back, they push it back. Sometimes that's just the way it is. I mean, and people get all excited, and I can remember they did this for in accounting, they did it for leases. The stuff we have for leases now, they said that we were going to have that, I think, in 2014. It was literally, it took like 6 years for it to actually, from the time they said, so here we are teaching it, 2013, we're all teaching it. You guys got to know this. You guys got to know this. It didn't happen for, literally for like, 6 years or something. So anyway, yeah, so it'll be interesting to see how that works out. But the focus on the exam now is getting more along the lines of looking at the operations, looking at the processes more than simply the numbers. And the idea is that people put so much emphasis on the numbers that a lot of times that can be possibly misleading just to see the numbers, whereas the overall, the process is what you really should be looking at anyways. So yeah, it'll be interesting to see how that is. But yeah, if you do a search on the changes in it, let me see if I have the blueprint here somewhere.
Does the dates for when you can stay the same every year? Like,
yeah, they've basically been the windows are 3 months, and it used to be they take out a whole month, they block out a whole month. I think now it's something like, I don't know, 10 to 14 days or something like that they block out. But let me see if I have maybe I don't have the blueprint. I thought I did. Oh, here we go. I can send this out to you guys here. Let me pull this up. So the blueprint, this is what it looks like. And you're thinking, hey, that's not blue, that's purple. Oh, wait, it's all these different colors. So anyway, how many pages is this? It's 100 pages. So it kind of goes through, boy, it's 100 pages of really small writing. So this is the blueprint, and it kind of goes through all those things that you need to know. For instance, here they tell you that ethics and professional responsibilities would be 15 to 25%. Assessing risk, which we're going to talk about in the next chapter, 25 to 35%. That's kind of a big one. Performing further procedures, but like the testing we just did, that would be part of it. And then forming a conclusion reporting, this would be writing the audit report. So that audit report that we saw the first day, that's what that's talking about. How do you write the audit report once you finish everything? All right, and again, it's going to go into it goes into detail, kind of all these different things. You'll see a very detailed breakdown of the different areas. I saw the SOC thing somewhere. Understanding between SOC 1 and SOC 2 engagements. Remember to understanding, again, there's not that much to those because it's actually an audit that somebody else is doing. You're using it in your report. So there might be a little bit about how you use their audit report in your audit report, but for the most part, it's fairly simple. But anyway, so this is the blueprint that they'll be using, and so the effective date is July 1st, 2021. So I'll send this out to you guys. All right. Any questions on that? Okay. I think, let me stop the share here for a second. I think I'm going to give you, one thing of homework to do. And it will be from the book. It's not a tremendously difficult one, but it kind of relates to what we were talking about. Let me share. Hey. Where am I at? Well, let me stop sharing for a second. Okay. So here it is. Okay, so this is a 2.52. It's on page 69. And it just talks about the creation of the PCAOB by the Sarbanes-Oxley Act. And down here they have the responsibilities for the AICPA, PCAOB, and SEC, and auditing standards. We talked about this. You can also Google it. It's not that. It's not necessarily it. But so basically, you're looking at identify. Let me see if I can copy this. Okay. All right. So you can look at the standards. Who's responsible in the auditing standards? What are the responsibilities for the AICPA, PCAOB, and the Securities and Exchange Commission? Hey. Well, which standards provide guidance to the auditors or issuers for issuers and for non-issuers? Now, remember, issuers, they're publicly traded. And non-issuers are obviously not publicly traded. Hold off on this one. So basically, see if you can just write up something, a sentence on each one of these, on what the AICP does, PCAOB, and SEC does, and then who has responsibility for issuers and who has responsibility for non-issuers. I think we talked about that in the handout. Oh, it's page 66 in the 7th edition. If you have the 7th edition book, it's on page 66. Thank you. So 69 in the 8th edition, 66 in the 7th edition.
I'm sorry, you said to not worry about number 3?
Yeah. Hold off on this one. I think we'll talk about that one together. Because it's actually a little bit confusing. And we'll go over it. It's not that big of a thing. Actually, they do test on the CPA exam, so we will go over that. But they do 1 and 2 on it. And why can't I go up to the top here? Hey, took off my. Okay, so this is on. In the 8th edition, it's on page, what did I say, 69? 7th edition. It's on page 66. And again, you're looking at, you know, what does the AICPA do? What are they responsible for? What does the PCAOB do? And Securities and Exchange Commission. These two are actually both together to some extent. The PCAOB is underneath the Securities Exchange Commission. And who gives guidance for issuers and who gives guidance for non-issuers? I think we talked about all of those things in there. And this we'll talk about. We'll talk about next class. There's actually quirks to it. There's quirks if you for the PCOB. There's definitely quirks for it. So anyway, yeah. So that'll be it. So problem 252. Is the numbering the same in the 7th edition, or is it a different number?
Yeah, it's the same.
Yeah, it's the same number.
Same number, okay. It's probably the same book. but put 8th edition on it and mark up the price. Okay. So that'll be due for next time. And next time I think we'll also do some of the some actual CPA questions. They're kind of general questions. Some of them are hard, some of them are easy that in the past have been on the CPA exam based on independence and that sort of thing that we have. So do this for next time. We'll talk a little bit about it, and we'll also cover number 3, and then and we'll also do some of the multiple choice questions for the CPA exam. And I got to put a drop in for the I'll let you guys go. I'll do that when I'm not taking up your time. So I'll also put in a drop for the classical sampling so that you can actually turn that assignment in. Oh, and we get the handout we finished too, right? So the chapter 1 and 2 handout will also be, I'll also have that in. Let me see something.
So just to be clear, we're gonna do the problem in the book and then the worksheet, the number 3 and number 4.
Yeah, and you're gonna so it'll be the entire handout, the chapter 1 and chapter 2 handout. And again, you don't have to make it perfect. You don't have to rewrite this. You guys see how I write. So you know, whatever you have, you know, you can take pictures of it if you did it in the, you know, however you turned it in, it's fine with me. And then in Blackboard, submit all coursework here. So this is where I will actually put these in. I'll show you how you put them in just for fun. 330, chapter 1 and 2 handout. I come down here, I put in the due date is a week from today, 11th. Points are always 100. Submission details, unlimited attempts. You can put in as many times as you want. Highest grade is taken. So you can put in, if you scan it and put it in one file, that's fine. If you can also just load 10 pictures if you want, that's fine too. And oops, I passed it. And so there's a chapter 1 and 2 handout. I'll do the same thing for the classical sampling. We'll put that in also. So the classical sampling one, and that's it, right?
So you want pictures, Professor, of the notes that we took for 1 and 2? That's what the handout is?
Yeah.
Okay.
Yeah, and you know, you can, however you do it is fine with me. If you want to put 2 pages and however you do it, each individually, it really doesn't matter too much. I can usually figure it out. So yeah, however you want to do those is absolutely fine with me. And I think from now on, I'm going to start doing the handouts, and I think I'll start making the handouts so that they're more type in on the computer, even though you generally learn more by writing it, but at the same time, when I'm showing it on the screen, it's probably more confusing to see me scratch it out. So maybe, at least for myself, I should be putting it in as a in the document itself. Question on that? So I will put in this. I'll also put in the next one for the classical sampling. We'll do it right now.
Are you also putting in the page 69 homework as well?
Yes, I'll put that in.
Okay.
Classical sampling. I as I go through here and do these, I had this set up as a, you know, so they all kind of would be the same. I would have to be clicking on all this stuff, but every time I'd go in, it would change it back to this, so I stopped doing it. Okay, so 330. Problem 2-52, is that right?
Yeah.
Okay. So 2-52. Numbers 1 and 2. Okay. Okay, so you're going to go to submit coursework here on the side, and that should have those in there. And again, they're unlimited. You can put however much stuff you want in there. And next class, we'll go over some of the CPA questions and for chapter 1 and 2, and start it on chapter 3. I might hold off on the sampling. We'll see. If we do any of the sampling, it'll be maybe later on in the class. Make sure we finish up chapter 1 and 2, and then also I do want to get started on chapter 3 because it's kind of a big chapter too. Okay.
Okay.
Questions?
No, thank you.
All right.
I have a question.
Good night. Yeah.
What about? I think if I remember correctly, you had mentioned we're gonna have like a really short exam after we finish the chapter.
Yeah. Yeah, so it'll be basically on, you know, I just gave you guys that the problem out of the, it'd be, you know, that'd be similar to what we have. And there might be a one or two things more on there. I will definitely tell you the essay questions, and then also some of the CPA questions. We're going to go through the CPA questions, and I always throw some of those on. They're not too bad. They're usually pretty much, they're fairly similar to the ones that we have. But you know, we go through as a group, and so yeah, you'll know pretty much what's on the exam. You know what's going to be on it. And again, the multiple choice questions are usually not too bad. They usually follow what we did on the CPA questions, and then the essay questions a lot of times will come basically out of what we do in the book.
Sounds good. Thank you.
Any questions? Okay. Have a good night, and I'll talk to you guys in a week. It's snowy outside, though. Don't go outside unless you have to. All right.
Good night.
Thank you.
All right,
Good
thank
night.
you.
Good night.
Thank you. Have a good one.
Good night.